I'm going to tell you about an amazing wealth management system called private family banking. Did you know there's a secret to keeping your wealth growing throughout your entire life and your children's lives and your grandchildren's lives? Listen closely, because this video will explain the whole secret. It is the simple concept of staying on the wealth curve. Most people want to be wealthy. They want to have a big pile of money, but they do not have a plan for building that pile of money. If they have a plan at all, it's a budget. And a budget is really just a plan for spending money. Meanwhile, most Americans make multiple millions of dollars in their lifetimes. They just don't know how to keep it. There are three kinds of people in the world when it comes to money. There are borrowers. They do not have enough money, so they borrow to pay for their lifestyle. There's the cash buyers. They save up their money and pay cash for everything. And then there's the bankers. They always come out ahead because they understand how money works. So, what is wrong with borrowing? When you do not have enough money, you have to borrow from someone. But to borrow money, you must pay interest. This is the pay-up scenario, because borrowers must pay up interest to whomever they borrowed the money from. Paying that interest on your credit cards, car loan, and mortgage each month never gives your wealth a chance to grow. You cannot get ahead financially. We all know that borrowers can get into trouble. They can end up owing more money every month because of the interest charges. We could say borrowers are riding a negative wealth curve. It can become pretty scary. Now, what about the cash buyer? The cash buyer understands the negative effects of borrowing and paying all that interest to someone else. He thinks cash is king, but is paying cash as good as it gets? No. We could call paying cash the give it up scenario, because every time the cash buyer makes a purchase, he is giving up all of the interest that pile of money could have earned had he not spent it. It's lost forever from your future, your children's future, your grandchildren's future, and so on. Well, what about the bankers? Bankers stay on the wealth curve because they never give up their wealth, and they always keep their money working. The wealth curve is the simple result of a powerful force known as compound interest. This is the build-up scenario. Rumor has it that when asked what the most powerful force in the universe was, Albert Einstein reportedly said, "It's compound interest." So you see, while borrowers are not on the wealth curve, neither are cash buyers. The cash buyer falls off the wealth curve each time he or she spends their hard-earned cash to make a purchase. What does it mean to fall off the wealth curve? It means that you lost all the growth potential that your compound interest would earn you on your money. Remember, pay up or give up. That money could have earned you, your children, and your grandchildren interest. What's the cost of falling off the wealth curve? This diagram shows the effect of making a cash purchase for a car at age 27. Notice that the greatest loss is seen at the end of the wealth curve. When this person reaches at age 80, she did not have time to make up all the lost growth that she suffered when she fell off the wealth curve at age 27. And she fell off by spending all her cash just one time. Most of us fall off the wealth curve several times per month. Can you see the terrible effect of falling off the wealth curve? Believe it or not, cash is not king. There is a better way, and that is staying on the wealth curve. In order to stay on the wealth curve, you simply need to do three things. First, create your own banking system by keeping your money in place where it can grow forever, tax-free. A customized dividend-paying whole life insurance policy is best. Secondly, use the cash value in your bank as collateral whenever you make a significant purchase. Did you know that you can borrow against the cash value of your policy at any time? No questions asked. And lastly, pay down the collateral loan as if you were saving for your next purchase, and you will end up with all the money you started with, plus the interest that your money earned while you were using it. Well, that is the secret. Instead of paying up or giving up, you can start building up. Private Family Banking Partners is dedicated to helping every family get on their wealth curve for life. Contact the partner that sent you this video and learn how you can start your own family banking system today.